Hello students, in this video we are going to learn how to make balance sheet. Now, very first thing, when you write a title, again you don't have to write only balance sheet, you have to write full balance sheet as at, and again you have to mention a date. So in all your three formats which you are going to make, trading, profit and loss and balance sheet, you have to write in full with the date. Remember this. Now, what you're going to list down in your balance sheet, as I said, balance sheet is not an account, it is a statement. When I say balance sheet is a statement, we don't write debit and credit, and never use a language as debit side and credit side. Why? Because balance sheet is a statement. We never see. Also, one more important thing, we don't write to and by. For this side we always write by and then the particulars. For this side we write to and then the particulars. But you have noticed this, I have not written to and by, because to and by you write in account, in ledger you write. Balance sheet is not a ledger, it is a statement. So whenever we make a balance sheet, we never write to and by inside the balance sheet, and we never write debit and credit at the top. We just write balance sheet as at with the date. Am I clear with this? Now, what we have to list down in this statement, on the left hand side, you will list your liabilities, and on the right hand side you will list your assets. Now, let's see first what do you mean by liability? Liabilities means anything which is payable. Liability means which is payable to outsiders, to the third party. Let's take one example. Suppose business have taken a loan from bank. So loan is repayable. When you take a loan, you have to repay. So when you repay to the bank, it is payable. When I say payable, it becomes your liability. That's the reason you will write bank loan on the liability side. Bank overdraft. What do you mean by bank overdraft? Bank overdraft means it's your negative bank balance. So whenever your balance goes negative, we call it as bank overdraft. What do you mean by negative? Let's take one example. Suppose in your bank account there is only 10,000 balance, and you have issued a check of 12,000 to some of your supplier. Now, when you have issued a check to your supplier of 12,000, you don't have that much of balance in your account. But if you have overdraft facility, if the bank have given you overdraft facility, the check will get cleared. How? 10,000 will be taken from your account which you have in your account, and 2,000 bank will give his own money to the supplier. So total it makes 12,000 ka payment to the supplier. How much of money is taken from your account? 10,000. How much bank paid his own money? 2,000 to make it 12, and they paid it to the supplier. Now bank will ask you to pay this 2,000. So what is the calculation here? You had a 10,000 ka bank balance, you have issued a check of 12,000, bank paid the check. Now how much payment was made? Of 12,000. What was your bank balance? 10,000. So from 10,000, if you minus 12,000, your answer will be negative answer, minus 2,000. So that is your negative bank balance. That is what I said, negative bank balance. But this negative bank balance is possible only if you enjoy overdraft facility from the bank. Otherwise the check gets bounced. If you don't have balance in your account, and if you issue a check to your supplier of more amount, it will get bounced. But if you have overdraft facility, you can enjoy this facility and your bank balance will go into negative. That is called bank overdraft. So whatever is negative, in our example negative balance was 2,000. You were having 10,000, you paid 12,000 by check. So your negative bank balance is 2,000. So how much is payable to bank? Next day or in few days you will have to go to bank and you have to pay your negative bank balance 2,000. When I say you have to pay, it is payable. So when I say payable, it is your liability. So always write your bank overdraft negative bank balance. Show it as payable in your balance sheet on the liability side. Then bills payable, bills of exchange. When we draw bill of exchange on the supplier, supplier draws on us, and we have to accept it, sign it and return it to them. So it is payable to the supplier. So when I say payable, it is your liability. Next item, sundry creditors. Who are creditors? They are suppliers from whom you have purchased goods on credit basis and the money is payable. Next, outstanding expenses. What do you mean by outstanding? Outstanding means unpaid. Let's take one example. You received an electricity bill. Now, you have not paid your electricity bill expense. It is unpaid. So whatever is unpaid, it is payable. You have to still pay your electricity bill. So when I say payable, it becomes your liability. And it may be many expenses. I have just taken one example. Outstanding electricity bill. If you have not paid your electricity bill. Outstanding wages. You have not paid to your labor wages to your labor. So that becomes outstanding wages. If you have not paid salaries to your employees, outstanding salaries. So any expenses which you have not paid, which is unpaid, still it is payable by nature, you will show it as your liability. Done with the liability side. Now this is important part. This year in class 12, you are going to learn partners capital account. This I am going to teach you in my next video. How to make partners capital account, and this is new, which we are going to learn in the next video. So these balances you will get of partner X, of partner Y from partners capital account. So this I will explain you in my next video. So capital balances is also liability. You know capital is a liability by nature. So capital is also shown on the liability side. Now let's move on to your asset side. What do you mean by asset? Properties or anything which you have rights, legal rights. If you have legal rights, if you have properties in your businesses, those properties are called assets in accounts. In accounts we call properties as our assets. Take one example. We have purchased a land, we have purchased a building. So land and building is our property. We have purchased it. We have a ownership. If you have ownership of any property, it is your asset. So list down on the asset side. I have listed down many examples of it. Plant and machinery. We have factory plant, we have machinery inside the plant. So all these things are our property, our assets. So list down. Furniture. We have furniture in our offices. Fixtures. All furniture which are fixed. Like say for example, we have tube lights which we can't hang on the air. So we have to fix it on the wall. So for fixing it onto the wall, we use some material. We use some certain tools. We call those tools as fixtures. So furnitures and fixtures. Then we have vehicles, which may also be given as motor van or motor car in the question. So whatever motor car, motor van, vehicle we own is our property, is our asset. Computers we have, laptops we have. It may be given as office equipment in the question sometimes. So do understand both the words, computers or office equipment. Then goodwill. What do you mean by goodwill? It is a fame which we have earned over a period of time. So this fame helps us to earn profit in the business. So this fame is our legal rights. No one can use our name. No one can use our fame. It is our rights. It is our legal rights. So this is your legal rights, fame, which can be used as an asset to earn more profit. So asset also means those things which helps you to earn profits. So all these assets, why you have purchased these assets? So that you can process your raw material into finished goods and you can do business and earn profit. So assets are also those things which helps you to earn profit. So goodwill is our fame, our name, which we use it in business to earn the profit. Copyrights. This we use it for any writing material. Copyrights we use for writing material. Trademark, again it is a legal right. All your legal rights are your asset. No one can take your writing material. Suppose you have written a story, you are owner of that story, you have created that story, you have written that story. So that story you can copyright in your name. That becomes your story. You are owner of this story. You got the ownership. So ownership, if you have, it is your asset, your story. So writing material, it may be a story, it may be a lyrics, it may be a poem, any writing material. Trademark, it is a product name. Trademark means product name, brand. You can use your brand for earning a profit. So whatever helps you to earn profit is your asset. Patents, any new design. It can be your logo in the business. So any new design you can patent, you can have ownership of that design. No one can copy that design once you create it or registered in your name. It again becomes your legal rights. It is your asset. No one can take away. Investment, you can make investment in shares or debentures. So these are the options. You can make investment into the shares. You purchase a share of another company. You invest money in it. Why? So when you invest in shares, the price goes up, you earn a profit. So when you do investment, your objective is to earn profit. It is an asset. Closing stock. This is second time it is coming into your accounting. When we recorded first time, we recorded it in trading account on the credit side, buy closing stock. This is second time you are recording closing stock. Why? Because this will be given to you in adjustment. Anything given to into the adjustment, you are going to record it 2 times. This I will take in the next video. But remember, adjustment you have to write 2 times in your final account. Receivable. So anything receivable is your asset. Anything payable is your liability. Anything receivable becomes your asset. Sundry debtors. These are your customers from whom amount money is receivable. Again, when I say receivable, it becomes your asset. Cash and bank. Whatever cash you have in your office, whatever bank balance you have, that is your money, your asset, you are having ownership of it. So it's an asset. Prepaid expenses means you have paid it in advance. So anything if you pay in advance is your asset. Why? Because you can recover it later. So that becomes your asset. And when you do the totaling of the balance sheet, your total of both the side, liability side and asset side, it should be same. We call it as tally. It should tally. Your both the side total must be same. Thank you, students.